please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
You're with us here on a fresh new edition of Trading Hour. The market is middling along 33 odd points higher. I am Prashant Nair. With me is my colleague Reema Tendulkar. Reema, hi. Morning.
Hi, not doing too much, at least in terms of the benchmark indices. So not following the Asian markets higher, where Japan is leading with a gain of close to about 1.5% and green across the other screens as well. Like Hang Seng has rallied close to about 170 points, and Korean markets too inching higher. But for our own markets, just up 0.1%, 0.2%. But let's move on and get in a few technical trading ideas in individual stocks.
Oh, yes, let's do that. Mitesh Thakkar is joining us right on the top of the show as always. He's Mitesh, thanks very much. Morning. I mean, we're up about 35 points. It's been pretty slow this week so far. Do you think action will pick up on in either direction, or after 3 straight weeks of gains that we had, this one is going to be, I mean, sideways and tepid?
Yeah, good morning. So I think you're right. We've had about practically 9 sessions of higher highs, and we've also had about this entire move continuing for last 3 weeks. We also hit very important, or we're very close to hitting very important supply zones of 10,600, 620. If you recall, in the month of February, any bounce back used to get sold around these levels of 10,600, 620. So it's a very important pivot. I think next few days, my sense is that we are more into a consolidation phase, at least on the indices. The Nifty could do about a range of 10,620 to roughly about 10,430, 450 on the downside. And as it happens, I think I'm still trading with more of positive bias on the stock side. That's where I think, action could be. So on the indices, it's time to take profits around 10,600, maybe buy it back closer to about 10,500. And on stock side, we are trading with more of stock-specific bias, but clearly with more of long bias.
Okay, so consolidation at the index level. Your bias in individual stocks is towards NBFCs?
That's right. I think, I've liked a lot of them. I think even the small microfinance names are pretty good over here. I have, buys on stocks like Equitas, Ujjivan, etc., and all. The calls that which I have right now, I have covered Equitas as one of my trading recommendations. Keep a stop at 152 here, look for targets of 163. And IDFC Limited, I think after a long time on the intraday charts, has given a good buy signal. It's up about 2% intraday basis. Buy with a stop below 53 or 52.90 is what I recommend, and 55, 56 should be your first target.
Okay. What about ITC? ITC has crossed its 200-day moving average, moving with strength today. Do you see more upside?
Very much. I think this has done a lot of base building around this mark of 255, 253, and then is reversing. The first target should be around 283 to about 285, and once we start getting beyond that, I think easily 305 could be achieved. So I'm quite positive from a medium-term perspective. If somebody wants to take a positional trade, even now comfortable recommending a buy for May futures, and I would look at targets close to about 305 and keep a stop at 264.
Okay. Oil marketing, I don't know if you put out a trade or you have a view, but it's seeing another leg down, I think, right? HP is down about 2.6, 2.7%. Any thoughts, Mitesh?
See, I think all these stocks have had some kind of a decline and then they bounce back, and now they are making fresh lows. The longer term chart suggests that these stocks will keep on underperforming, I think, for quite some time. So idea should be to sell them, but again, not today. I think they're making fresh lows. But when you get a decent bounce back of about 5 to 6%, I think that's the best level to initiate short positions. The structure is quite weak, so next few weeks, I think these stocks will keep on correcting more.
Okay, Mitesh, thanks very much. Appreciate you joining in with that perspective. We will speak again in a bit. F&O strategies now. We have Yogesh Mehta from Motilal Oswal now with us. Yogesh, thanks very much. Good morning. What are you trading?
Yeah, good morning. Since markets are this 8th session yesterday, it was positive. And still we are bullish, and the resistance level on the higher side remains at 10,580 and 10,630. So more or less we are on a long bias, and we are recommending ITC with a positional trade, and currently it is quoting at 274.5 in future segment. Keeping a stop loss of 267, one can initiate this long position with a target of 283. The other one is on the short side is Tech Mahindra. After breaching 680, 685 level, now there are double top has been formed there. And we believe that correction can continue, and current price is 664, keeping a stop loss of 675. Target could be in the range of 640 to 42 levels. And the third is South Indian Bank. Yesterday it has shown good momentum, and currently it is 26.65 level, keeping a stop loss of 25.5. One can initiate long with a target of 29 rupees.
Okay, Yogesh, thank you very much for all those, F&O trading ideas. Let's get in our next guest. The company on our radar right now is Blue Star. Motilal Oswal is quite bullish in the room air conditioner space. They see the industry growing at 15 to 20%, and Blue Star has been confident of outpacing the industry growth even in FY19. B. Thiagarajan, the joint MD of Blue Star, joins us on the phone line. Good morning, Mr. Thiagarajan, and thanks so much for joining in. Summer is only getting hotter. The last time we spoke to you, you indicated that you're looking to see your summer sales at 30 to 40%. Has it panned out as per your expectations, or has it been even better?
Absolutely. First of all, good morning and thank you for talking to me. The market is doing extremely well. There are rains here and there, but as I had indicated earlier, it will always be there if it is a harsh summer. I see the demand picking up across the country, including Tier 3, 4, 5 markets, and that too for very aspirational high-end products. So we are very bullish about this summer.
Mm-hmm. I mean, we spoke with you about 20 days back, but this is the peak time for you. Could you give us an update? How has demand shaped up so far in this season?
When I spoke to you last, I had indicated that the growth should be, the market growth should be anywhere between 15 to 20. Like we have done every year, we wanted to grow faster than the market. That was the update I had given. And I said, if you wait for 10-15 days, I can pinpoint whether it is going to be 15 or 20% growth for the market. I think it is more like 20. At the same time, in that conversation, we were wondering whether there will be shortage of material. I don't think so. I am of the opinion every player has planned for anywhere between 20 to 25% growth. Therefore, I do not see a shortage of material, but it is going to be a great summer.
Okay, so industry growth at the upper end of the 15 to 20% earlier expectation, closer to 20%. Mr. Thiagarajan, we've also seen an increase in a lot of the commodity prices. Would that imply that prices for ACs would go up?
We had increased the prices sometime in January by around 5 to 6%. We are holding on to that. It's not only the commodity prices. There is also a concern about the foreign exchange, how it will play out. But as you can imagine, the supply chain gets filled in around 6 months earlier. So as far as summer is concerned, I think the margins should hold. I do not see a major concern. But as I indicated, some 0.5% here or something like that, it is perfectly fine. As long as the volumes come, the scale effect will compensate the operating margin. So therefore, I don't think that is the concern. On the other hand, the consumer finance demand has gone up substantially. 40% of the sales is happening through the 0% finance, where you buy out the interest. I am seeing this trend dramatically growing. See, the one end, Tier 3, 4, 5 is growing. Second, they are buying high-end inverter products. They are not going for a L1 product. Third, they are easily availing, thanks to the companies like Bajaj Finance and all, or TVS, where very, very consumer-friendly finance schemes are available through the digital platform. That is growing. That can affect the margin by 0.25% to 0.5%.
Sure. Just a quick point. The 20% you talked about was for FY19, Mr. Thiagarajan, right?
That is right. In the summer, there should be a greater skew.
Of course. Yeah.
Normally, it should be in the order of summer standalone should be at least 30%.
The new, not so new, but relatively new thing was inverter ACs, right? I mean, garnering a larger and larger share. But has that? I mean, could you give us an update if that is still true?
It is true. The table has been merged, the energy efficiency table, 5-star and inverter. There is no something called a 5-star fixed speed. It is a 5-star inverter. So earlier, the ratio of the total pie should be only 30%. I expect this year it to touch 45%. In other words, 45% of the sales should be inverter. By 2020, I think it should be around 65% of the market should have moved in there. Though we expected by 2020 it will move away, I don't think in India anything goes away completely. Even today, winter air conditioners still survive.
Right.
So I would expect inverter share to reach around 60 to 65% by 2020.
Right.
Are inverter ACs higher margin products for Blue Star?
Yes, it is a higher margin product, but much more than that is the fact that if you take the inverter alone, our ranking will be much higher. In all air conditioners put together, we will be 5 or 6. In inverter alone, we will be 3 or 4. We tend to get a higher share in inverter air conditioners.
Okay, so by say FY20, if you could give us some statistics with inverter ACs contributing more and more to the company's growth, what will the company's margins look like considering inverter ACs come in at higher margins? What would your market share improve? You have a stronger hold in inverter AC market. So give us some numbers, say by FY20, how you see the picture.
So our strategic plan is made on FY21. So I can easily relate to a 3-year roadmap. In FY20, remember, there is going to be one energy label change. That is FY21, December 31, 2020, there will be an energy label change. There will be Paris-Kigali Agreement related certain refrigerant regulation. Keeping all this in mind and the overall economic performance of Indian economy as well as the consumer spending, our goal is to reach a market share of 15%. And at that point of a time, I think the market will be 7.5 million. And so barring, what will happen to next elections and whether the government will be stable, all that I'm ignoring for the time being, or I'm not allowing it to affect my mind. So on a 7.5 million market, our market share goal is 15, and R&D investments or manufacturing, everything is based on that. Operating margins, we had always maintained it will be somewhere between 9.5% to 10.5%. And as you can imagine, as we go ahead and invest in backward integration or manufacturing capacity, I think it will be between 10 to 10.5% because I have to account for certain other investments to be made in terms of revenue investments itself. So margin guideline, 10 to 10.5% is the goal. It's not a guideline. I'm talking about what is our aspiration. Market share goal, 15. And the inverter part of it should be around 65% of the total market.
This market share and this 10.5% margin, I mean, by when you said? 7.5 lakh AC market, right?
The FY21 goal.
FY21, okay, sure.
That's it. Today, last year our market share was 11.5. For FY19, market share goal is 12.5.
Sure.
And the margin I'm maintaining between 9.5 to 10.5.
Got it.
So that's it.
Thanks very much, Mr. Tyagarajan. I appreciate you joining in and good speaking with you. So it's good going. I mean, so 20 days back, Blue Star told us that they think the market could grow between 15-20, but now they're saying it should grow FY19. I mean, the sales and sales for the industry for FY19 should grow at the upper end, which is 20%.
Auspicious occasion of Akshaya Tritiya. Today, gold prices have in fact fallen. So Manisha is here now with us. Manisha, perhaps it is a good time for retail investors to go ahead and buy gold. It's anyway run up so much at 32,000. Today, a minor dip.
Yeah, as you said, any decline is a good opportunity to actually go out and buy. Indians anyway would be buying it, symbolic, small lower ticket size in sense of jewelry, etc. But a decline in prices does that good. But if you look at the prices as compared to previous year to today, Akshaya Tritiya to Akshaya Tritiya, it's a gain of 8 to 10%. We are looking at all-time highs in sense of gold prices on Akshaya Tritiya right now at 32,000 rupees. Of course, the all-time high for the gold prices has been 34,500, but 32,000 is a level that you have never seen before on Akshaya Tritiya, and the market forecast is that you could actually see nearly 5 to 15% of a jump up as compared to previous year in sense of gold buying this time around. And there are so many ways of buying. Remember, earlier it used to be only physical buying, which most Indians would go out and do. Also because Akshaya Tritiya this time around coincides with the wedding season, so that wedding jewelry buying also would start today. People have been booking for last 1 week or so, but the deliveries is something that they would be taking today. Apart from that, there is, of course, ETFs, there is gold funds, there is sovereign gold bond scheme that the government also has been pushing for, where you have a discount of around 50 rupees per unit if you buy it online. And of course, apart from the gold prices movement, 2.5% per annum is something that the government also ensures that you get. So there are various ways of buying gold, and the help also comes in from the fact that there are geopolitical concerns. The dollar has been on the weaker side. There are lots of reports out telling you to diversify your portfolios in favor of gold, and there is a conservative estimate that by the next year you would be looking at yet another 8 to 10% gains coming in for gold prices. So with all of that as a background, it perhaps is a stronger push or favorable if you go out and buy gold today. But Sanjeev Bhatia of PC Jewelers also joins us from Delhi now. Mr. Bhatia, hi, happy Akshaya Tritiya to you. What is your sense? What are the buying trends looking like? I know it still is early in the day, but what has been the sense this time around?
No, there's an overall optimism in the market, and as you were saying, see, gold for Indians also represents a store of value. So, and one of the charm of the gold is that price has been going up gradually. Any short spurt or whatever does create a temporary, customer does wait and sees where the price is going. But in the long run, one of the very charms of buying gold or gold jewelry is that the prices have been appreciating. And this year also the trend remains the same. There has been a certain increase in price, but in spite of that, we feel that we should see a good sales happening today.
Any quantum, any percentage rise from the previous year that you're working with, Mr. Bhatia?
We are factoring in an increase of 20% in value, and since the prices have gone up, so about 15% in volume. But this is obviously an internal budgeting process which we are working on, and the day has just started, and let's hope for the best.
Well, absolutely. I also want to get in a sense on how do you see the Indian market standing right now? I mean, we've gone through a GST, we've gone through a demonetization, especially for the gold industry. We also have seen hallmarking being talked about, and then, of course, you have PAN card mandatory. There is a lot of changes, perhaps even coming now, as the finance minister talked about making gold as an asset class going forward. How do you see the industry as it stands right now?
Correct. So all these steps are only making this industry more regulated, more compliance friendly, and in the sense it is again what we have been saying since last year. It is now pushing more industry towards the organized sector, and as one of the major players in the organized segment, we are getting the benefit of that. Tanish is also saying the same thing, and we are also saying the same thing. Whatever regulations, compliances government is bringing on this thing, it is frankly making the entire sector move more towards the organized this thing, and which is very good for the industry as well as consumers we feel, because hallmarking, gold purity certification. So this is very good for the consumers.
Well, absolutely. You know, also, what is your sense?
Etc. We feel that all these are very good steps.
Absolutely. What is also your sense? Because we are looking at, you know, a gold board, a gold regulator, a spot gold exchange coming in. There is just so much that the government perhaps seems to be working on. How do you see that changing the industry as we move forward from here? Do you see it coming into the mainstream? Because at this point in time, that isn't something that this industry has been able to achieve.
You are very right. Because see, gold in India historically has been governed by various factors: RBI, Finance Ministry, Commerce Ministry. So each one has been moving on its own, has got its own agenda and got its own priorities. So industry had been demanding that there should be a common regulator with common set of policies, and there should be a certain vision for this sector going forward. Because do what you think so, but Indians' love for gold and jewelry remains where it is. On the contrary, as the GDP increases and the purchasing people get more purchasing power in their pockets, so frankly, this industry also is increasing by nearly 7 to 8% per annum. Everything, it gives employment to literally crores of artisans and workers. So it's a very integral part of Indian economy, and you cannot wish it away. So it's always good that if you bring it under a common regulator, a common policy, and everything is clear to all. And we feel that the government is moving in the right step by. If we have a gold board, it will be a step in the right direction.
Well, absolutely. Something that the industry has been waiting for a lot of time now. One final question, Mr. Bhatia. What is the sense that PC Jewelers looks at right now? What kind of sales, what kind of margins? What are you estimating now from this day, from this quarter? Because as we've seen the World Gold Council report, last year, this quarter, India single-handedly actually led up the gold sales in the Asian markets overall, actually, etc. Do you see that happening even now? And specifically for PC Jewelers, how is this quarter now looking?